When people save money, they get excited. Your biggest cost is tax, categorically. So if you save it, yeah, it's very exciting.
In this episode, we break down the biggest tax myths that are keeping business owners broke, the wildest tax hacks, and the real reason why entrepreneurs are moving their businesses to Dubai.
I am an entrepreneur, I'm a business owner, I'm a property investor, and I own an accountancy firm which shows you how to start your business, scale your business, and invest your profits into property tax efficiently to give you more time and do the things you actually want.
We also dive into crypto, how to structure your business to pay the least tax, and the smartest ways to keep more of your hard-earned money.
How do you make tax exciting?
You let people know how much money they can save with what they are already doing.
What's stopping a business owner just moving overseas? Why should we stay?
It's incredibly tough. We had 10,000 millionaires leave last year. 10,000. One of the biggest myths is it's really hard to start a business. It's not. You are not taught this in school. Why?
So John, it's amazing to have you on today, mate. Thank you for coming through. Where have you travelled from?
Kent.
Nice, not too far then.
Yeah, not too far.
So we've seen you pop up quite a lot on our algorithms recently. You've got some amazing advice around taxes, how to be tax efficient, and just how to save money if you're an entrepreneur or a business owner. Mm-hmm. So for the viewers who may not know, who is John Noble?
John Noble, so King Nobez if you follow me on Instagram. I am an entrepreneur, I'm a business owner, I'm a property investor, and I own an accountancy firm which shows you how to start your business, scale your business, and invest your profits into property tax efficiently to give you more time and do the things you actually want with your life.
Nice, that's amazing. And some of the advice that you give around taxes, when I was looking through your Instagram, through my research, was super valuable. I mean, I even learned a couple of things just from watching your content. So let's just start off by addressing the current persona around accountants, the stereotypical accountancy kind of prototype. What is that, and what do you think's wrong with it in 2025?
Things have changed. So historically, an accountant is the archetype is a 40, 50, 60-year-old person who works with paper, they're slow. Things have changed. So all of the information previously would be behind a paywall. We, and I say we, I mean the new age of accountant, we're giving away value for free, as much value as possible. When we do a reel or a video or a podcast like this, we are trying to give people as much information as possible so they can control their taxes and their life, essentially. There's 21,000 pages of tax law in the UK. It's deliberately complicated. Why? Because they want it to be complicated, so it benefits them. Who's them? The people who wrote it. So it's our job, it's our mission, as I feel, to explain this in digestible pieces of information for business owners, normal people in the UK who have a job, who want to keep a little bit more of their hard-earned cash. What's wrong with that? So this is our mission.
Do you feel like the old school accountants, they purposely guard a lot of the information, or do you feel like they just don't know the information?
Both. So I no longer post on LinkedIn because it's full of the old school accountants, and they hate me, and they hate other people doing a similar thing like me.
You get a lot of hate online.
Yes.
What do the other accountants say on LinkedIn?
They say I'm unprofessional, I'm not qualified, I cannot say that. Oh my God, do you have insurance? Well, I have all of those things. I have a practice license, I am qualified, I can say that, and it's correct. But also on the other side of that coin is I'm sure it makes some people feel insecure because they don't know everything that we know. When you put yourself out there online, open to criticism, and tax is a very divisive thing. Half of the people say, well, I'm working really hard, I should keep as much as possible. The other half say, you're the reason the NHS is failing, blah, 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 all of the negative things that come along with that. Yeah, well, those other accountants will see the information you're putting out and think, well, I didn't know that, and I don't like him because of that, so I'm going to say that this isn't correct, this isn't the way to do it. Things have changed.
What's the rules around, you see sometimes, I've been in a room before, I've never really seen this online, but I've been in a room where people have gone to give advice and gone, by the way, this is not financial advice.
Yeah.
Do you have to state that before you give financial advice?
Yeah, so there's a few different sectors. You've got financial advice, accounting and tax, law. They're different divisions. So I can speak on tax, accounting, business. I can't tell you where to invest your money because that's a financial advisor's role. So there's small nuances between that. Tax and accounting, absolutely, I could speak about it all day long. I could also let you know what I would potentially do with cash, but I can't say, go and do this with your money, because then if you lost it, then I would be liable. But really, what our job is to show you how to keep as much of your cash as possible via the tax system.
What do you think some of like the main like common myths are when it comes to like accounting and tax for businesses?
I think one of the biggest myths is it's really hard to start a business. It's not. It's an admin exercise. You need somebody good around you to just show you the steps. Most people think of a business and they think of Tesco, Sainsbury's, BP. No, you can find something you enjoy. There's so many online marketplaces. Information is free now. So you can set up a limited company. You can work out how much you are making from your job. If you don't like that job, you can break down, say it's £30,000 a year. You can break that down into £100 sales. And then you've got a guide. Okay, I need to sell this amount in this year. It's not that hard. You just need to take the micro steps. You are not taught this in school. This information is secretive. Why? It's not complicated. You really, really can make a change to your life within a year or two if you put your heart and soul into a business and you have good advice and you keep as much of that money as possible with a limited company rather than having a job. And look, don't get me wrong. Most people aren't cut out to be a business owner. It's really stressful. Every month there's periods where you think, I can't do this, I want to quit. The next day, this is the best thing ever. I can't believe how good the highs are. 3 days later, you've got payroll and you're like, oh my God, that's supplied. It's not easy, but it's the same for every business owner. And once you realize that you're a tribe and there are lots of people like you in the UK doing the same thing, it gets easier and easier. So
it's so true. I mean, I think you actually have to be a little bit gone in the mind to be a business owner. It's like we were talking about this prior to the episode starting. What is it? Like 10% of businesses only last above 5 years.
Yeah, so many businesses fail for so many different reasons.
What would you say one of the biggest reasons is as to why perhaps a semi-established business who's doing okay with cash flow might fail?
So cash flow is the key thing. If they're doing okay with cash flow, it's being realistic with what they're capable of doing. Businesses have ceilings. So a service business, for example, take your average service business, runs off a 33% labor cost, 33% net profit, 33% operating expenses. Well, if in your head you think, well, I want this 50, 25, 25 ratio, it's not realistic. Same with when you say an Amazon seller, for instance, they have the ability to make millions of pounds because in their next order from China, they will add a zero and order an extra 10,000 units. You have to be realistic with what the business is capable of. And the key thing for that is actually speaking to people who you may see as your competitors. Your competitors are your best friends in business because, take an accountant. I'm friends with pretty much every accountant in the UK around my age through social media. I meet up with them. We share profit and losses. We know who's working with who. We know what works, what doesn't work. When I look at their profit and loss statement and I say, oh, you're spending this much on software, but we're spending this much, that's invaluable. But the business owners who keep themselves to themselves and they don't speak to their other, they're not competitors, they should be friends, that opens up a door into saving 5 to 10 years worth of errors, to be honest. You can look at the blueprint of a successful business, but you have to be willing to share that with other people too.
Yeah.
And naturally, we don't want to do that. Like there's a feeling inside, I've worked really hard for this, I took the risk, I've lost money here. But you've taken that. Your value there is your lesson. Give it to people and you get another lesson back from them.
I suppose it's kind of getting like mentored by your peers, right?
Exactly.
And then, so what's the best way to pay yourself as a director?
So for the upcoming tax year, we're back to £12,570 as a salary, and the rest is a dividend up until £50,000. Your salary is an expense to the business. They have recently changed the amount of national insurance you're going to pay yourself, but by paying yourself that salary, you're saving the corporation tax, which is either 19% or 25%, which outweighs the cost of the national insurance. You never, ever want to be, if you have the option to, a higher rate taxpayer. And that is what a limited company does. It gives you the flexibility to choose what you pay yourself. Whereas an employee would make it's actually really sad. We work with lots of people who make 100, 200 or 300,000 pounds in a job, and what they actually take home is nothing.
Half of that, yeah.
Yeah, there's a point. Once you make over 100,000 pounds, you start losing your personal allowance, and there's a portion of your income that you're being taxed 62% on. Think about that. You go to work, and 62% of that income is going to, well, where is it going? We don't know.
It's robbery. Quick pause from the podcast to give a special shout out to one of our sponsors, the Rejuvenation Doctors. The Rejuvenation Doctors is a hair transplant clinic in the northwest of England in Bury, owned by Dr. Jamie. Now, I can personally vouch for these guys, as I myself around 2 months ago had a hair transplant from Dr. Jamie, and I can't wait to see the growth in the next 3 to 6 months. The service was amazing. It was very VIP. He looked after me throughout, and he made a very uncomfortable experience extremely comfortable and caring. Now, boys, if your hairline's going back, if you're receding, if you've got that McDonald's hairline, do not wait until it's too late. Message Dr. Jamie today at the Rejuvenation Doctors. His tags are in the link to the description of this podcast, and he will sort out your hairline just the same as he's sorting out mine. Yeah, I think with the tax system in the UK, it genuinely just feels like we're fighting an uphill battle, and every single budget that comes out, it just feels like it's getting worse and worse. And the Labour government...
Apart from Liz Truss's one, but that just fucked the economy.
Yeah.
Yeah, well,
Liz Truss's one was actually
it was
unbelievable.
live. The conspiracy around that is globalism, and globalists actually tried to make her come crashing down because they want higher taxes. So I mean, like, what's the benefit of a UK business owner in 2025, right? Like, what's stopping a business owner just moving overseas? And I know people are doing that, but why should we stay, in your opinion? Or do you even think we should stay?
It's incredibly tough. We had 10,000 millionaires leave last year. 10,000. And people think...
How many millionaires are there in the UK?
How many millionaires?
Yeah. As a statistic.
There's 10,000 less, that's all I know. And that's not a good thing.
They're the people paying, paying a lot of the taxes, driving the economy.
Yeah. They
Create
provide a lot of
jobs.
value. They create jobs, they create businesses that employs people, and those people then pay their tax. It's a very... tough thing to leave the UK because of other ties that aren't financial, such as family, kids, schools. But if it, from a purely financial perspective, why would you choose to start a business in the UK? It's suppressed. Ambition is suppressed here. The more risk you take, the less and less reward there is. And that's just not okay. Soon, if they make it even harder for businesses to get started and scale up, well, everybody will just keep leaving, and there'll be less and less tax because there's less and less jobs, less and less revenue in the UK. People can move so freely. The thing is with the wealthy, and I don't personally think £1 million is a wealthy person. You can buy a house in London for £600,000-700,000 with a mortgage, wait 10 years, you're a millionaire. They're just normal working people. £5 to £10 million is wealth, where you can have freedom of movement. Those people aren't staying in a country that tax you like this. They are moving to a better quality of life where they get to keep more of their cash. And that is the reality of it.
Yeah.
And you can only argue with reality, right?
I think it's really scary, actually. I mean, I heard a statistic that a millionaire last year left the UK every 45 minutes. There was only one other country in the world where more millionaires left last year, and that was China. And if you look at the size of China compared to the UK, well, that speaks volume.
Net millionaires, like, in terms of our population, like, we lost the most.
Oh, 100%. So, I mean, do you see it getting better? And if so, how?
I don't see it getting better. I see it getting much, much worse. It almost feels like there's an agenda,
Yeah,
an unspoken thread. So these decisions are not random decisions. There's a theory behind it. But we don't know what that theory is. Why would they make it super, super hard when you can see the detriment? You can see people leaving. It's in front of your eyes. There's no benefit to that.
Every day
For
as well.
us.
Every day I'm seeing I'll speak to a new person, or see it on Instagram, another person like, oh, okay, I'm here in Dubai now, and I'm living here. Like, it's relentless. It's like, when's it going to stop? Yeah. It's like, surely common sense tells the government that what's the point, because these people now aren't paying any tax.
Yeah, and do you know when it started to feel real for me? I now know at least 7 people that have left the UK that are business owners, and not all are actually millionaires.
Yeah.
Some are just extremely ambitious people with the ambition to become a millionaire, and you want them in the UK. But my theory is the government aren't stupid, despite them making stupid decisions. They know that the top 10% of earners contribute to 60% of the taxes.
Yes.
So why would they let this happen? That's what I can't work out.
We can only speculate. And when you do that sort of speculation, you get called a conspiracy theorist, and they suppress you. But there is a reason for it. And there's a thread between all of these decisions. They're not random decisions. What do you think it is?
What do I think it is?
Straight back at you.
Yes, this is where I'm going to be called a conspiracist. I've done a lot of research into the World Economic Forum, and this is public information. So it's like, I don't understand it completely, but it's like the most wealthy businesses all in one room. You have to apply to be in the World Economic Forum. I think you have to have a net worth of above, what is it, like 100 million or something crazy like that? And their agenda, I think, is it the 2030 agenda?
Yeah, the net zero.
Yeah, so this is public information on the World Economic Forum website. It says that you will own less and you will be happy, right? You will not eat as much meat and you'll turn to alternatives like bugs, etc.
What?
Yeah, it's crazy. And this is not a conspiracy, I swear to God. It's on the World Economic Forum
I ain't eating
website.
bugs. I've tried it. in Cambodia. It's not good.
Bugs aren't the one. So in answer to your question, why do I think they're doing it? I think the elite want to own all of the assets, and I think they want a large population of just working people that are feeding the elite machine and keeping it running. I don't think they like the idea of day-to-day slaves, is how I think they see us, owning things. Yeah. I think they want to own the assets, and I think they want us to not even leave our house. You know, that's my thoughts.
That makes sense.
For COVID, they didn't want us to leave our house, did they?
Yeah. No, that does
Ask
make
yourself
sense.
why. You know, like if you want to get really deep into it, was that part of the agenda beginning? In terms of lockdowns, not leaving your house. What I don't think they did anticipate is how clever day-to-day people are. Now everybody works from home, and now everybody has location freedom, and now people have more opportunity to move freely.
Yeah.
So
is this just in the UK, this world?
I think it's
a global thing.
It's like a global thing. It's called
even in places like Dubai, for example. How can you see
less
that happening?
so.
Because they're not, you know, they're operating completely different.
I think it's more of a Western agenda.
US,
Yeah,
UK,
Europe, France, Germany.
Okay.
But it's clear from all of their decisions that they're trying to eradicate the small business owner. Look at the banks and landlords. You used to be able to have a investment property. After working really hard, you take your cash, you buy an investment property. That's your equivalent of a pension outside of a limited company. They brought in Section 24, which means that you cannot now claim your interest, mortgage interest, as a fully allowable expense. That happened in 2016. And now the banks who are the banks who give the mortgages are now buying up all of the properties. They're now building 50,000 properties, but what they're not doing is building them to sell. They're building to rent.
Yeah.
On scale, on mass. This is a whole new dimension to making the small family investment company irrelevant. They're making it too expensive. They're saying you can't claim your biggest cost as an expense. But hey, we're going to go and build 50,000 properties, which you cannot compete with. And because of the scale, it's so much cheaper, it's so much more profitable for them. And that just ties into exactly what you were just saying, where they're making it harder and harder for the family unit to actually do well, have a business, start a business, invest, even if it's just a single property. It's becoming harder and harder.
You know what else is crazy, right? Just on that topic is I saw a statistic, you'll probably know this, but if one person was to earn £120,000, they get stung massively. Mm-hmm. But then if you have a wife and you both earn £60,000, you still get your child benefits, etc. But when you go over a certain amount, all of that stuff gets taken away. And then that makes you think they don't actually want...
Incentivized.
They don't want a sole breadwinner. They want everybody to be at work.
Yeah. Because
Why?
if everybody is working, everybody is getting taxed. So even though if one person's making a lot more, that one person gets taxed more, there's a lot more tax revenue if every single person's out there in the workforce being forced to work. And the reason, this is a new thing in the last 50, 60 years where mum and dad both go to work. It used to be one sole breadwinner, and it used to be a good lifestyle, a middle-class lifestyle. And now everybody needs to get out there and contribute to keep up with inflation, to keep up with all of these additional costs. Yeah.
Do you ever feel like you're fighting a losing battle trying to save people taxes when the tax laws just keep getting worse?
I feel as if I become more valuable each year because it's so complicated that... So my essential core message is, if you can, have a family company. By having a single limited company with mum and dad as directors and split shareholders and having the kids on the payroll. When I say on the payroll, I mean actually incorporate them into the business, use up all of these. You get £12,570 tax-free. It's not a lot of money. There's 5 of you from one company. Well, that is quite a lot of money. And that's an expense to the company. Use the company, fully utilize the company. Most people are scared to spend money on it. And if you have a good accountant and you do use your business bank account for personal expenditure, we just remove it. We don't let you break any rules, but we know what you can get away with within the tax laws to actually make it beneficial. So what you're talking about of having mum and dad at work, well, doing that in a limited company is the best thing you can do, because then instead of you owning the shares to the company, what if mum and dad own a holding company that owns the trading company, like a podcast, and then they want to invest that money? Well, they can tax efficiently move that money around to an investment company. These tax structures were set up for the wealthy initially, but now everybody has access to them with the right information. Is it a good choice for everybody? No, it's a bespoke decision. It needs to fit your lifestyle, your goals. And we spoke about actually having a business isn't that easy. You actually have to have some sort of value you can provide.
How old does a child have to be to be?
That's my question. Yeah.
Well, there's a few different rules.
On the way.
Kids can, like young kids can be used for marketing for the business as a one-off cost. And then from 13, they can start working depending on school hours and a certain cost. 16, you can put them on the payroll. 18 plus is just...
We've got a few years to go yet.
I was like, yeah, my little brother, he can come and work for us. You know?
Yeah. So what I'm thinking is, for people who may have a business partner, they're not immediate family.
Mm-hmm.
If they have a partner, in terms of like a other half, not a business partner, how could they structure that? So say, for example, if we wanted to take our girlfriends out of work eventually, could we, in theory, pay them the PAYE salary and up to 40k divs?
There's a few ways of doing it. So the easiest way, you can add a director to a company and remove them simply, but when you add and remove shareholders, there's a potential capital gains tax charge because there's value to the shares, potentially, assuming there's value there. So if you want to incorporate your family into your company, add them as a director, because that gives you the freedom to declare an annual director's salary, or you can do it monthly. If you add them to the payroll, they'd be on a monthly payroll. Mm-hmm. The director has more of a say in the business, which is something you have to think about. Shareholdings. So there's lots of different ways you can set up shareholdings. Most companies have ordinary shares and all of the rights are split. You've got voting rights, dividend rights. If you have 50 shares and your partner has 50 shares, then the dividends would be split 50-50. But you can change the class of shares. You can have alphabet shares and you can give somebody one share and you can attribute a different dividend voting right. So you can say Class A shares have these dividends and Class B have these dividends. So you can allocate funds very tax efficiently. The key thing is you just want to avoid being a higher rate taxpayer. And a lot of the time with a limited company, that's possible. If your limited company year end straddles 2 personal tax years, so your personal tax year is April to April, zero flexibility with that. Your company year end is the month you incorporated your company. Well, if that overlaps your personal tax year, you can then choose what tax year to allocate dividends in. So if you've got £80,000 worth of dividend you want to declare, you would put £50,000 of income in the first tax year and the rest into the second. So you can control it. The more people, more family involved in the company, the more flexibility you have because there's more cash you can actually hand out.
Get Hugo on the payroll.
Yeah.
Get him on the
I
payroll.
don't know if
Get him a
HMRC
t-shirt.
would allow that.
So what could you put through the business, which is kind of questionable, but you could get away with it? So for example, like, could you order things like meal prep, Huel shakes? You're not
Just
buying
asking
them
for a
personally.
friend.
Just for a friend.
Asking for a friend, yeah.
There's no
David Lloyd
specific
membership, or
there's no specific list of items you can put through a company because all companies do different things. Mm-hmm. If your business is selling Rolexes, you can buy Rolexes and have them on a balance sheet. If you're selling cars, it doesn't make sense to have a Rolex on the balance sheet. if your expense is wholly and exclusively for the business, and that means it's 100% for the business, you're away from work, you're staying at a hotel, that's a business expense. You're going to a meeting, your food is included. All of these things, as long as it's wholly and exclusively for the business, are allowable. There's a grey area with something called duality of purpose. So clothing is an interesting one. If this was branded, heavily branded with my logos, and you would be able to see that it's my company, well then, yes, that's allowable. This, because I personally benefit from this, this couldn't be an allowable expense.
Can you do like a percentage of
Not with
items?
clothing.
Not with
So
clothing.
there are lots of expenses you can claim a percentage of. So if you pay for something personally, like a phone bill,
Yeah.
and you pay £100 a month and 50% of it is used for business, then you can claim 50% of it. But things like clothing, if you personally benefit, it doesn't work out.
What about eating out?
Eating out, yeah, there's
Yeah.
lots of different rules on this. So staff entertainment is allowable. Client entertainment can be used. You can use the business card for it, but it's added back for tax purposes. You can't claim the tax relief on it. Travel and subsistence, of course, if you're
Can you
away
just
for work.
always do staff businesses? It always takes staff members to the client.
Well, your accountant will ask you what it is, and it's up to you to tell us what
Yeah,
it is.
sure,
yeah.
sure.
So
Sure.
with these staff lunches, right? Is it capped, or could you have a lot of staff lunches?
So for events for the year, there's a £150 limit per head. So Christmas parties, this is quite common. You can have a Christmas party for 10 staff members, and they can bring a family member. When it comes to travel and subsistence, your everyday working in the business, there's no cap, as long as it's reasonable. There's something called materiality. If you're turning over £100,000 in your company, but you're spending £60,000 on food a year, obviously it doesn't make sense. But if you're turning over £1 million, that percentage would be in line with the percentages of somebody of
So
business
what
that
sort of
size.
percentages does it look like? Because I'll just give you an example. I was out with a company the other week. I got taken out, and you know everything's going on the card. A massive company, everything. You know, we're looking at going to like flight club, we're having drinks and dinners. Everything's going on the card. But I felt like maybe if I'd done that, it's very, very different given the size of our business. So
Yeah.
is there a certain
There's not a
percentage?
specific percentage because all businesses are different. Some businesses have a lot of staff. Some businesses have a lot of client entertainment. Some have none. So there's an industry average for the company. And HMRC know what these are. So if they were to look at a car salesman, I don't know why I keep going back to the car salesman, but they would look at 100 other businesses like that, and they would just see the trend. And they would say, okay, well, that stands out. That doesn't make sense.
Okay. Fine.
for somebody who may run a business, who might go on quite a lot of overseas business retreats, right, as opposed to holidays, how does that work? Are business retreats fully tax deductible?
The same rule, wholly and exclusively. So if you are going to Dubai for a show which is specifically related to your business, say you own a real estate game and you're going there to look at property, to purchase property, to maybe put it on service accommodation, it's in a limited company in the UK, that's fully allowable. What you can't do is go there for 2 days and extend the trip by 2 weeks. It has to be for the company. You can't bring family members. You could bring staff members or directors. If you're going to the Canton Fair in China and you're looking at products to sell for your Amazon business, fully allowable. You can't go to Ibiza and just randomly go to a club and say it's market research because we're thinking about starting a club.
I've got a question for you. So I have a travel agency, so this is where it gets a little bit more interesting. So I have a travel agency. Let's say, for example, I go away. Obviously, so I do market research. I look at the airline, do product research, do a write-up when I get back. Also with the hotel, experience the product, potentially meet some clients out there as well. If my partner comes with me, how does that work? Because appreciate, yes, maybe the cost of the flight doesn't get allowed. However, if we're staying in the same property, whether there's one person in the room or two people in the room, the cost is exactly the same.
Add her to the business because it is a
So
grey
she is
area.
actually a B shareholder.
Yeah, if she's a shareholder of the company, then that would be okay.
She has B shares.
April does.
Yeah.
Oh, nice.
She has B shares because of the, well, it used to be quite good, was the tax-free dividend. It was 2,000, and I think it's 1,000. This tax year, I think it was 500. What is it next year?
500.
Another 500.
Yeah.
Okay, fine.
It used to be 5,000.
Wow.
Yeah, things have got tremendously worse over the last 5 to 10 years.
Do you know where I think this is just a massive scam, right? Is, you know, when you go into the 40% income tax bracket threshold, well, that law was the same maybe like 20 years ago,
Yeah.
I want to say. And if you were earning £40,000 in 2000, it's the equivalent of today probably earning the same as £80,000. But the problem is now loads of people are above the 40% income tax threshold.
Mm-hmm.
So why isn't that going up the same way money's losing value?
It's a silent tax. Because they're not saying you're going to be paying over more tax in the headlines, it doesn't get all of this bad press. But inflation, wages are going up, the cost of everything's going up, but the point at where you pay tax is stationary. It's a silent tax. That is a tax. It doesn't have a name. It's called a stealth tax, essentially. There's many of them out there, but it's a tax. But they don't want to say, oh, this is going to cost you a lot more. They just say wages are going up, and you think, oh, that's great, I'm going to be paid more. So, yeah, you may get paid a little bit more, but they are also benefiting hugely.
100%. Because, I mean, if you're on 40,000 a year PAYE, you clear around £2,500 per month. Can you live on £2,500 per month if you don't have any help or a partner? Maybe, but you're not going to be living a comfortable lifestyle, especially if you live around here in the south. It might be different up north. You know, what are your thoughts?
In London, it's super, super tough. Your average rent for a one bed in London is £1,700. That's without council tax, without utilities, eating out, seeing friends, having a life. No, it's not enough money. And that's really sad. And that is the reality of the current situation.
That's the average wage as well, isn't it? I think it's about
Average,
40.
Yeah, in London.
40K.
And that's not a lot of money to live on. And if you do not have help from parents to get on the property ladder, or you do not have a partner, so you've got a dual income, or you've had a baby quite young and you've got additional expenses, you're trapped. And this is one of the biggest things about business. To actually get off of the ground, you do need things aligned for you. You do need to have as minimal expenses per month as possible. You can't have £1,000 overhead a month and get a business off the floor, because that money needs to go into the business. The first few years of a business, the first year is usually always a loss, unless you have a very valuable skill set that you've curated over time somewhere else. So you're not even making money in the first year. Hopefully the second year you break even on average. The third year you've got a little bit of trajectory, you've got a client base or your product's working. So starting a business, you need cash behind you. And in that scenario, these people are struggling to actually live on their £40,000, not a bad wage. But even that is just an average existence in London now.
So with the businesses that you work with, do you kind of go in behind the scenes, you look at all their expenditure, where money's going, and you effectively give them a business plan?
Yeah, so we're quite unique in the way we work, where I know everybody by name and everybody knows me, and I work with all of them. We don't. So some accountancy firms, the business model, once you get really large, is you hire a junior accountant and they would handle a portfolio of 50 clients. And then when you join the accountancy firm, we say, this is your point of contact. You work with this person. I work personally with everybody.
How many clients do you have on your roster?
So we've got 400 clients and it's a full-time job. But I love what I do because I have the same conversation over and over, so it gets better, with business owners, and the value you can provide just by reducing the stress and just saying, you can do this, you can't do this, this will save you money, don't do that. It's very simple for me because I've done it thousands of times. But the value a new business owner gets from me is, is peace of mind. And what's the value in that?
I agree. I think with 400 clients, I mean, it's different. Like, for example, we've got about 45 clients, but we have to speak to our clients like 5 times a day, every day. I think with an accountant, it's a different dynamic. So, like, what would be your kind of check-in with a client? I guess it depends probably on
some people,
the situation.
So we send emails out to everybody every 3 months just to let them know we're here with a link to book a call. We say, check in, any questions, let us know. They've all got our WhatsApps. It's human nature. You've got some people who message you every week. You've got some people who message you every 6 months. You've got some people who message you when they need to, and that's what they want from you, because they want to know, if I've got a tax question, I get a quick answer. It's accurate. We're a property specialist firm. So all of our clients are either property investors or they have companies where they've got retained earnings and their goal is to invest in property.
What would you say is one of the biggest client wins you've had over the years?
They're all amazing. There's not one. So we work with people who are just getting started. We've also got people on the books with £10 million on the balance sheet. We save everybody tax, everybody. There's not one person who's benefited more than anybody else. There's not one massive victory. Everybody gets something from the relationship. I think my sweet spot, my favorite kind of person is just getting started. They come to us with a business model. What's really hard is some people come to us with a business model and I have to tell them that that isn't the reality, or that doesn't work, or you don't have the experience for that. Because some people sit in their bedroom, pen and paper, and they've just put some numbers on a sheet and they're like, I'm going to do this. There's a marketplace. The marketplace has a value. So sometimes you have to say to people, you have to tone it down. Or sometimes you say, look, you can double up. But being realistic with a business plan from day one, the £0 to £300,000 turnover mark is really nice to work with, because those people are usually leaving their job. They're getting their own business, they're getting their freedom, they're getting control of their finances and time, because time is time is what we want. It doesn't matter how much money you make, you've only got a certain amount of time each day. And people want to do what they want to do with their time. Sometimes it's reading a book, sometimes it's working 7 days a week. It's different for everybody. But working with that £0 to £300,000 client who then wants to invest in long-term cash flowing, appreciating assets to give them more time for their family and their future goals, while knowing that that's a save point for them. A trading business, anything can happen to a trading business, but when you put that money into a property in the UK tax efficiently, and you know that if you did nothing for 20 years and you come back, that has doubled, if not tripled in value, it's paying out cash flow every single month. I love that. That's what I... They're my favorite people to work with.
Most businesses do most business owners that I know, they do want to get into property in some kind of way. I guess that's a good way to obviously kind of niche yourself as well, right? Because everyone's doing it. What are some tips and advice around the best ways to do that?
Your biggest cost in property is your finance cost. So we do lots of videos on holding companies and trusts and things like that. But a lot of the time, keeping it simple is very, very effective. The banks play a game of risk. And here's an example. If you purchase a £100,000 property with a £25,000 deposit, you'll get a £75,000 mortgage on that. When that property goes up by 10%, and it's gone up by £10,000, you get to keep the whole £10,000. So your £25,000 is now £35,000. If it goes up by 1%, you get a multiplier of 4 because you've got leverage with the banks. So when you have 5 or 10 properties doing that, that's the goal, that's the game plan. So you want to keep things simple. If you've got a lot of money in your companies, a holding company is a very effective way of moving money around. At a certain point, you don't want to own things personally in your name. So if you have a single limited company and you own the shares, when you sell those shares or you take money from the company, it's triggering personal tax or capital gains tax if you sell the shares. You want to own a holding company that owns all of your other things. Doesn't have to be a trading business. It could be a property. You can have an SPV, which is just a company that does one thing. It might hold one commercial property. You own this holding company up here. And then if you've got a trading company with excess profits, you pay a corporate dividend to the holding company, tax-free, and then there's no link. And then you can invest that into anything you want. It could be a new business. It could be a new commercial property, residential property. But then that's a save point. It's like when you play PlayStation. Playing Crash Bandicoot, you get halfway down the map and you hit the save point. That's what that property is, because if something happens to this trading company over here, you can close it, get sued, liquidate it. But this over here is now safe.
So I had a bit of a scenario like this last year where I was getting into property and I seeked out tax advice and I kind of looked at like what I had and I thought I needed a group structure. Mm-hmm. But all I done was an intercompany loan. Yeah. So I just loaned the money from my current business to the property business. Mm-hmm. There was no need for a group structure.
So there are 3 main ways to fund property. A company-to-company loan is very simple. but it creates a thread between the companies. And if something were to happen to the trading company, that loan would be called in. And there's a few different ways of doing that. But even if you wrote off the loan, that would then be classed as income and taxable. So say you transfer £100,000 and you purchase a property. That property is illiquid. To get the cash back out, you'd have to refinance it and you wouldn't get all of the money. Or you'd have to sell it, which all of the money in property is in a long-term hold. So company-to-company loans are effective at a small scale, or if you can comfortably pull cash from somewhere else to repay the loans. But a trading business might last 1 year, 3, 5, 10. The property company should be there for life.
This is just to do a flip.
Yeah. Oh,
So
if it's a flip,
I put the money
yeah,
in there doing the flip, and then I'm just going to pay.
So
it
that's
back.
very different. When I think about investing, it's holding on to it a long term. A flip's actually a trading business. That's the product of the company, so
Yes.
that's really effective.
Yeah. So I didn't need a group structure in order to do that.
It's long term if you're going to hold on to it, I guess.
Do I pay tax on that money I've moved out of my current bit, the corporation
No,
tax?
it's just
still?
a loan. So your corporation tax is on your profit and loss. It's your income and expenses. Your loan is a balance
That's not
sheet.
an expense.
No, so it's just owed back. And if you own both companies, or the same shareholders own both companies, then it's quite straightforward because you just choose when to.
It's 50-50 on one, and then I'm the sole shareholder on my.
Yeah. So as long as
company.
you've got terms for the loan and everybody is happy with it, it's fine. But a lot of the time, somebody introduces capital and somebody introduces the skill set, such as they might actually do the building or the refurb, and then you sell it, you get the profit, you split it, and then you just take it.
Yeah, that's how
With the long term investing in the property, do you think it makes a difference with like buying lots of properties that are maybe cheaper up north, or for example buying houses around here which are more expensive?
There's a few different things to think about. So you're either going for cash flow or capital appreciation. And if you're going for cash flow, you need a better yield, so you need to go up north. Or capital appreciation, you're going to get more likely you're going to get more capital appreciation in the south. Less houses, less roofs, less boilers, less tenants, less hassle, but also less cash flow. And you also need to look at if you want to be hands-on or hands-off. If everything is hands-off for you, so I've built my portfolio with deal sources, they find the properties, manage the refurbs. I don't do anything. All of my energy and time is in the business. I can afford to invest away from where I live because it doesn't take any of my time. If I was hands-on, well, yeah, it would have to be around me. And if I live in the south, I'd be forced to choose capital appreciation.
Yeah.
It all works. It's just a different strategy.
What's your favourite strategy? Just buy and hold, buy to let?
I do the BRR method. So I buy it, refurb it, rent it, refinance it, get the money back, and I just go again. I buy 2 and 3 bedroom freehold properties. They're all the same. They're not in one area, but because they're the same property, they cost the same, they get the same refurb, they get the same tenant profile, you can just repeat it over and over again. 0 corporation tax to pay with that method. Because of the refurbishment, it's strategically not improving the property. We're not adding extensions. We're taking run-down 20-year-old properties and we're bringing them back to life. That's a repair and a maintenance. If you replace a kitchen with the exact same standard kitchen, the bathroom, plastering, carpets, paint, that's a revenue expense. So that puts the company into a loss. And by having your company in a loss, your next property will also create a further loss. So it's called momentum investing. So you buy your first property, you get the refurb done, it's in cash, you rent it, you maybe get £600-700 a month from it. Sit on it for 9 months, send the bank there, they revalue it. We're not really in a market where you can get 100% of your money out commonly anymore. Yes, of course, there's properties out there like really good deals, but back in the day, you could get 110%, 105% mortgages. Now, if you put £100,000 into a deal, you're looking to get back 85%, possibly 90% if it's really good, sometimes less. You are sending a human round there to value the property. You've got to hope they're having a good day. So there is an unknown in that. But you get your cash back. The company's in a loss because you've just repaired the property. And then you take that cash, you let the rent build up, you take some money from your business, and you go and buy the next property.
So at what point do you pay tax on it when you sell it?
So if you sell it, yes, but we're never selling. So this is what I mean. The strategy is everything. So this strategy, you hold on to it forever. There's no tax on debt. So when you refinance it and you get a loan from the bank, there's no tax on that. But if you initially put your own cash into the company as a director's loan, you can take that because you're just repaying yourself. So it's debt, companies in a loss, no corporation tax. There is a scenario where you would end up paying tax, and that's if you just stopped investing and eventually your profits from the company would erode the losses. The company does make a profit each year, but it's always playing catch up with the loss.
Debt.
Yeah.
So you get paid the money by the bank, which isn't profit.
Mm-hmm. It's really slow, it's really boring, and that's what property investing should be. It's not meant to be exciting. You're doing flips. That should be exciting. You can make a lot of money in a short amount of time. There's a lot more risk. You have to hope the market is where it needs to be. You have to hope that the financing, however you do it, works. The way I invest is the most boring and slow way, because I know in 30, 40 years' time, it will still be there. It'll be worth a lot more. The rents will be higher. The mortgages, I only refinance once. So I purchase it in cash, I refinance it once, and I leave it forever. Some people need to refinance every 2 to 5 years to get the cash out, to go again. That's my strategy.
Do you feel like you'll stay in the UK long term, or do you think you'll eventually
I
move
am
overseas?
looking at different countries every night.
Oh, I thought you were going to say you got the Great Britain.
Yeah,
socks
no,
on,
I'm
mate.
not
I thought you were
actually.
gonna be
I'm not
all for
actually
it, like-
leaving. I'm not actually leaving, but I'm looking. It's just so tempting. But for me, it's not a fun. I've got family here.
Yeah, that's the thing.
I'm not going to just up and leave to save some money. My family are very important to me. If it was purely a financial decision, I wouldn't be working this hard in a country that doesn't reward you for that risk. It's the risk, it's not the hard work. If you work really hard and you know it will work, well, yeah, that's fine. Business is tumultuous. It's up and down. You never know what's going to happen. And if something were to go wrong and I had to close a company, well, then it's all on me. It's my capital. It's my time. It's my effort. There's no, oh, you gave it a really good shot. We're going to give you a loan to go and start a new business. No, you'd have to go and get a job. So it is really tough to be a business owner in the UK. They tax you at every single transaction. Every transaction.
How do you make tax exciting for people?
You let people know how much money they can save with what they are already doing. So if somebody's got a business, and what I really like doing is when a new client comes to us, we look at their how things are set up, for instance, and what they've been doing and what the previous accountant was doing, and we say, you could have done that, you could have claimed your mileage, you could have claimed a portion of your work from home expenses, you spent nothing on travel and subsistence, have you not had a coffee this year? Like, we just bring it to their attention that all of those things were tax deductible. When people save money, they get excited. That is just a fact.
It's more exciting than making money if you save.
Yeah. Your biggest cost is tax, categorically. So if you save it, yeah, it's very exciting.
What are some of the most common ways that somebody would save tax that they may not be doing at the minute?
Things you spend money on personally can all go through the business. It doesn't have to go through the company card as long as it's wholly and exclusively for the company. If you have a personal car, but you're doing business mileage, you can claim 45 pence per mile for the first 10,000 miles, 25 pence thereafter. Even if you cycle a bicycle around for business, you can claim, I think it's 25 pence per mile. Things are just things you have no idea. Yeah.
Your bike, you just make some money.
But what the government do is they incentivize their goals through the tax system. So why are they doing that with bicycles? Because they don't want cars on the road, because they've got the 2030 net zero. Electric cars, they want you to buy an electric car because they don't like diesel or petrol. So they say, okay, well, this has got a really low benefit in kind tax. They use you in a way to reward you tax-wise, so they hit their goals, essentially.
What are some of the other things as well? So we've got mileage.
Mileage, working from home, actually using your business card more than you think, because you are allowed to spend money on anything as long as it's for the business. Putting a car through the company, if you've got a personal vehicle, so say you've got a car that's worth 30,000, you can sell that vehicle, so you get your 30 grand, introduce that capital to the company as a loan, so it's owed back to you at any point, and then you lease a car. Leasing a tax efficient car, a low CO2 emission car, is really tax efficient. So then you could lease a BMW X5 hybrid, which is quite a tax efficient vehicle, for £600 a month. That's a tax deductible expense for your company. You save the corporation tax. All of the costs for that car, MOT, servicing, tyres, everything, cleaning, can go through the company, but you're still owed £30,000 from the loan. So you could say you had that same vehicle personally, could sell it, get the cash, introduce it to the company, get the same car through the company, get the tax savings, but then next time it comes to taking a dividend or paying yourself from the company, you can just repay your loan from the vehicle. So that's a very good way of doing things.
Could
so
you
it doesn't. Sorry, Jake. So it doesn't have to be an electric vehicle solely then for a tax benefit.
So the electric vehicles are the most tax efficient. A very good hybrid with a battery range, low CO2 emissions with a good battery range are also tax efficient. There's a benefit in kind tax. So if you benefit from something from the company, you pay a 1, 2, 3, 4, 5% value of the P11D value of the vehicle. Some hybrids are very good.
Wow. I didn't know that. That's interesting.
Yeah.
That is.
You kind of have to put money in the business to then kind of then take it out.
Yeah. You need to be spending money through the company to get the tax relief. But directors' loans are also, if you have cameras, laptops, anything that you use for the business anyway, sell it to the business. It has a market value. So if you've got a Mac and it's worth £2,000, you can introduce that to the company. That gets credited to your director's loan, which means you can take £2,000 from the company tax-free, but you've still got use of your Mac. Nothing's really changed there. So that's a very good way of doing things.
Let's talk about crypto, because that's obviously a big topic at the moment. So, like, do you have to get involved in that as an accountant much? Is there a lot of your...
Everybody's holding some form of crypto. And everybody, well, I say 99% of people are holding it personally.
Yeah.
And I would also say most people aren't declaring anything. HMRC are aware of this. So they're in a bit of a flux. They are trying to write the rule book to capture this.
Yeah.
You've got your know your customer information coming from Coinbase and companies like that. But yeah, there's lots of platforms. Everybody's investing in some way, shape or form. Not everybody knows the tax due on some of the sales. So if you're transferring between coins or tokens, that's a taxable event. And that's where people are really getting caught out. People think I've put £10,000 into Coinbase and then I cash out 2 years later and I've got £30,000. There's my gain. Every time you make a change between coin, it's a sale between asset. And that is triggering a taxation point. So
it makes it like super long to account
Yeah,
for,
I've been in crypto for like 4 years and I've traded, I don't know, one transaction. How do I go back and track?
It's very hard. It's very hard. There are platforms that you can link up to any like Binance or Coinbase, and it tracks it all for you. But yeah, it's new, and anything that's new, it's going to take a while. HMRC are so archaic. Most things are still paper. You have to send in written letters for lots of things. VAT is digital. They are now bringing in making tax digital for income tax and self-assessment, landlords. We're in 2025, and their agenda is let's make it digital. The digital world has been here for a very long time. So crypto is almost one level above that in complexity.
Oh, crazy, yeah.
So nobody has a crystal ball. Nobody actually knows how they will crack down on it, but they are aware that there's billions in untaxed income.
A lot of people are selling crypto at a loss, though. Like a lot of the time, I've sold.
If you're making a loss, there's no tax to pay.
Yeah.
But as long as you, I guess, report it, declare it in the right ways, otherwise you could get stung.
Yeah. So it goes on your self-assessment, but if you do have losses, you have to record them to use them within 4 years. So say you made £100,000 loss on it, and then you made £100,000 gain 6 years later. If you didn't record the loss, you can't use that. So there would actually be zero tax to pay there.
Can you write off a lot if you're not in a group structure? Can you write off losses from other companies?
Yeah, so you've got group loss relief.
If you're not in a group structure.
If you're not in no. So a group structure has lots of benefits, but it also comes with higher costs. So you've got something called the small profits threshold. So your first £50,000 is taxed at 19%. If you've got 3 or 4 companies, that's divided. So a group structure is if you are planning on making £100,000, scaling up lots of companies, and you want to invest. If you're not in a group structure, your tax is your tax at the end of the year. You look at your figure, your net profit, and your taxable income on that.
can you benefit from companies that are obviously, well, it's not a benefit, but say one of your companies has, like we make a loss on the podcast, for example, another property business which we've made a loss on, like, is there any way we can offset those losses anywhere?
You wouldn't be able to offset it, but if they were trading between each other legitimately, a company that has a profit could be invoiced or could invoice another company, but it'd have to be. So this is what happens in Dubai quite a lot. People set up a company in Dubai, a consultancy company, and they're invoicing their UK company. And what that does is it creates income in Dubai. They've got 0% corporation tax on the first, I think it's £150,000, and then 9% after, and it's reducing the profit in the UK. That's a very common thing. It's not, you can't just invoice a company for no reason, but that is very common over there. When it comes to in the UK, there's not many things you can do. If you had a group and you had a company with a loss and a company with a profit, you can write off that loss against this profit.
Do you have to be, does it have to be in the same tax year?
I think it's 1 year. You can go back 1 year.
And do you have to be the same? So say I've got a company where I'm the sole shareholder making all the profits, and then I've got a company where there's 4 shareholders. Do you have to be?
So if it's in a group, the rule is the holding company has to own 75% or more of the shares in the subsidiaries.
Right. Okay. Fine. So you have to be 75% or more.
Yeah.
So it can only be,
because that is what
effectively
it means by
it can only
group.
be you.
Yeah, precisely. Or you could have those 4 people own the holding company. So it's the group.
Yeah.
But if you've just got one holding company, so what's very common is people do joint ventures, and property is very common, or they've got 5 or 6 businesses with 5 or 6 different business partners. You may have a holding company, and then all of your shares are below there. You might have 10% here, 20% here, 30% here on different companies. There's not as many benefits to that sort of group, but it gives you personal flexibility in paying yourself a dividend.
Fine. So you kind of just move your profits up in one direction.
Precisely. And then you can do whatever you want with it.
Yeah. Couple of more questions.
Sure.
So one of the other things that I was thinking about doing was making profits for my company, my business, investing into stocks, shares, crypto. First question is, would I have to make another company that basically holds the fund, if you like, that then invests to not pay the personal income tax?
Well, it depends what you're investing in. So if you're investing in
Let's
the
say
UK,
stocks and shares,
yeah,
and
stocks and
crypto.
shares, you want to be in an ISA. So you can put £20,000 a year in an ISA.
That's personal though, right?
Personal, yeah.
Yeah.
But it's all the gains are tax free.
Yeah.
So if it's from a tax perspective, that should be utilised.
The problem is though, right? If I got profits in my company,
Yeah, and you
I'm
want
then
to take
taking
it
out.
and
It's
then-
costing me 33% to
Yeah.
get it out. 33.75, whatever it is, for the higher rate.
Yeah.
It's costing me that to get it out, and then I've got to put it in.
Yeah, there's a few things here. So the reality of it is, if you have a company that trades crypto, the banks will close your bank account. They do not like it.
Wow, really?
It's so we work with lots of prop trading firms.
Yeah.
But they're not actually trading it. They're trading it on behalf of a platform, and their bank accounts gets closed all the time. Financing. So if you want to get financing for your business and you've got crypto on your balance sheet, they do not like it. So if you need a loan for your business, property, don't go near crypto. If you've got a property company, it makes it so much riskier for the bank. They just will not lend. If you keep it in with a corporate ecosystem, so you're not paying any personal tax, you can have a separate company for it. It could sit on the balance sheet. If you had a trading company with a bank account open and then you had 5 Bitcoin on there, that's fine. And then if you sell it, you'd pay corporation tax on it. But then...
Just separate, completely separate company.
Yeah.
And that's
But
fine.
you can have it with a trading business, but it would affect financing.
Yeah. Fine. I'd want to keep it separate
Yeah.
anyway. But so to get the 20,000 into my personal ISA, because you
Yeah.
can't get company ISAs, can you? So you have to have a personal ISA, which, yeah, I've thought about it, just opening up an ISA every year for the next 10 years. You've then got your 200 grand
Yeah.
in there.
But you
That'll
can
then-
contribute £20,000 a year, so it just builds. It's investing it links to your personality trait. So I can't invest in crypto or the stocks because anything on a screen I panic sell. I've done it in the past. My brain, I don't like that. It's very stressful. That's why property is my thing. I feel like you have to be, people say, have a little bit of everything. I don't think that's good advice. Warren Buffett says, have everything in one basket and just look after the basket. If you're a property investor, do property to the point where it's worthwhile, kicking out cash flow, you're keeping it long term. If you're investing in stocks and shares and S&P 500 and index funds, do it to a point where you can see the gain. Because on average, you'd make 7% a year, I think. 7 to 10% is the long-term average. You're possibly looking at 3-4% year on year if it's not in a loss. That's so slow that it's a long-term play. So you need enough capital in that investment where you can leave it there long-term. So in a company, you've got additional fees for the company needs to stay solvent, laws change around companies all the time. But if you invest in the stock market personally, you're not going anywhere. And if you do, it doesn't matter because you're not here. So that's a long-term investment play.
You just got to pay the 33% to get it out.
Yeah.
And then move
or
it
8%, or depending how you do it. The cryptocurrency is different because I don't think people are planning on holding crypto forever. They're waiting to cash in. So it's more realistic to do that in a company.
Yeah.
But stocks and shares should just be put in an index fund and left, unless you're gambling on random stocks.
That's what I do at the minute. I just do index funds.
Yeah.
I do have index funds held in a pension, but I'm not going to see that money for years. So for that, I put money in a pension. Now I'm just thinking like, oh, it's pretty pointless.
I'm not a big fan
of pensions.
Personally, of course, they're very tax efficient. You can buy commercial property in them. I find it so boring. It's just like, it's done. Oh, I've saved some money. Oh, it's invested in that. I'll come back when I'm 50, 60, 70. I want my cash. I want to be able to do something with my cash. Even if I lose money, make money, it's a game, isn't it? And I just want to be involved in business and investing. I don't want 500 grand in a pension that I don't have control over.
Yeah, that's what I like. It's so far away, and how can you trust the government? You can't trust the government today about what they say, what they said yesterday, that they can come through a bit today, let alone what they're saying is going to happen in 50 years.
Yeah.
Like, how can you?
And now they're saying it's potentially taxable after the last budget.
Like
all of a sudden, like for 20, 30 years, put money in here, tax efficient, we won't tax you. Oh, actually, we're going to tax you now.
Yeah, they will.
Yeah.
Man.
I guess I do kind of worry about that with property as well. I know it's tax efficient right now, but I guess you could say that for anything, right? Like, you don't know what the elites are going to change. So I guess you can only really go with what the most tax efficient strategy is right now.
At that time, yeah.
And the uncertainty is why there's a reward. If it was certain, there wouldn't be a reward. There are ways. So commercial property is... So you've got two types of company. You've got an investment company and a trading company. Trading companies are much more tax efficient, and a lot of the time a commercial property doesn't have all of the detriments of residential. If somebody lives in your property, a residential property, they've got all of the rights. Great, it's a family home. But as a landlord, if they don't pay, it's really hard to get them out. If they trash it, there's not much you can do. Commercial property, if a corporate tenant doesn't pay, you can get them out within 28 days. They have to pay 3 months in advance, whereas if you're renting out a residential property, they pay monthly. If somebody moves into a commercial property, they usually spend £50,000-100,000 on it, making it usable for their business. So say you've got a warehouse. The kind of business that would rent the warehouse for 5 to 10 years is already making money. They're going to need to put an infrastructure in there to actually use it efficiently. So they're going to spend money on your property. You get an FRI lease, so it's fully repaired and insuring. So with residential property, you're responsible for any leak, anything to do with the property you have to fix. When you hand over a commercial property to a tenant, they take on the property, they look at it, they sign it, and they say, I will give it back to you in this state. If there is a leak, they fix it. If anything they do to it, even if they add value to it, you can say to them at the end through dilapidations, oh, you have to return that to me in the original state. And it might cost them another £100,000 to take out all of their infrastructure. Next time you're on a high street and look at an ex-barber's, and then you go in there, and then a month later it's a cafe, they've had to spend all that money in removing everything in there and then putting the cafe in. And then
it won't be a cafe like 2 months later.
Yeah, exactly. I was about to say, commercial property is the way forward in property investing. You need to do residential first. You need credibility with the banks. You can't do interest-only mortgages. You need to pay down the capital.
Oh, wow.
You need more cash. if you buy a residential property anywhere in the UK, you could throw a dart at a map. Somebody will rent it. Commercial property is all about the location. It's a lot more risky because if you have an empty commercial property, it's going to cost you a lot of money.
Do you do commercial yourself?
I'm looking for a new place for our accountancy firm.
You mentioned barbershops.
Uh-huh.
There's a hell of a lot of barbershops out there with no customers making a good profit, cash only.
I'd hate to speculate on this, but it's true. I think Nigel Farage already did.
Reform spoke about it. So, have you ever been approached by some barbershops for your business? Or like, what type of accountants do these barbershops go to? Is there like a specific niche for that?
Barbers.
We are a legitimate accountancy firm. So when people engage us, we do checks, we do anti-money laundering checks, we do all of these things from day one. So I think people aren't going to come to us with the question, but once they see actually that we do everything properly, they don't get to that point. There are, I look at the high street all the time. There are random shops all over the place that have 0 customers. There's a shop near me that sells chairs, just randomly. It's got like 10 chairs in there. It's been open for years. How are they making money? Like, what's going on?
Musical chairs.
Yeah. There's lots of these shops don't have customers. And if you look at the product they sell it so cheaply that there's no margin, yet they stay open. If I give them the benefit of the doubt, I just say that they're pot committed, they're too scared to close, what else would they do? Or they're being used for money laundering. There's a lot of cash out there, there's a lot of cash businesses, and it is quite common that people would go to a business where they could just give them 10, 15, 20,000 pounds cash, put it through the books. And it's just the reality of the situation, isn't it?
Because you do think, right, you know, when you go anywhere and they say cash only,
Yeah.
it always kind of makes you think, are you guys fully legit or what? I mean, like, what's your opinion
Obviously
on that? Do you
not.
think there are legit cash only businesses?
Of course.
Or?
Look, if you take 1,000 random people in the UK, you're going to get some legitimate people, some people who are bending the rules, some people who are just crooks. It's human nature. There have been criminals forever. There's a spectrum of people. So yeah, it will never go away. Even when everything is digital, which it probably will be soon, there'll be other ways of not declaring things. And that's probably where cryptocurrency comes in now. Now it's cash or debit card. Eventually it might be debit card or crypto. And then who's declaring the crypto? And then there might be another level. Yeah, it's that's the world we live in.
Changing.
What's like some of the biggest companies you look after, like in terms of their turnovers?
So we deal with a lot of big landlords.
Okay.
So we don't like to work with massive turnover businesses. We work with companies doing a few million in turnover, but we work with big landlords who have got 50, 60, 70 properties. They're where we can really...
What do you see with like the bigger companies that they're doing well, that the smaller companies just don't really understand yet?
Economies of scale. The more you scale... So there's a few different phases to business. When you start, you've got £0 to £90,000 when you're not VAT registered. This is a very profitable part of your journey. Very profitable. Sometimes it could be one. Yeah. Sometimes it could be one.
You don't even know how profitable it is until it's gone.
Yeah, I know. That's the sad thing. So like you can have one or maybe two people, especially if it's a service, you're looking at 60, 70% profit. If you're selling a product, yeah, you've got to buy the product, sell the product, ship it, pay Etsy or Amazon. But a service business especially, it's like the holy grail of, you think, oh my God, if I could have 5 of these, I'd be a millionaire every few years. Then you go from £90,000 to 230. That's the flat rate scheme, VAT area, where you can join a flat rate scheme, which is an industry average.
Is it up to 230?
It's up to 230. You have to leave it.
I thought it was 150.
So if you've gone over £150,000, you can't join it.
Oh.
Yeah.
Some industries, so e-commerce, that's 7.5% flat rate for VAT. That's okay. But then you're getting to the point where you've possibly got offices, an extra few staff members. You're not making any more money. You've got massive headaches. It's no man's land. You're paying VAT. You're making the same money you were when you were turning over 60, 70 grand. You're ambitious now because you've realized you can make money. You don't have to go back to a job. You can always go back and start a new business and make 30, 40, 50,000 pounds. And then you think, okay, well, the only way to actually get through this is to actually build a saleable enterprise where you need 5 or 6 staff or systems where you've got to get to 5, 6, 700,000 pound turnover plus. That is the hardest part, because sometimes you're not making any money So we employed 3 new staff this year, and the day they came on and the payroll, I looked at the profit and I thought, feels like regression, feels like we're going backwards. Like this, why did we start this? It was for a profit. But what that does is it allows you, if everything runs smoothly, in a year's time to be making a lot more money. There's phases to business. And as you say, you don't know how profitable you are until you go to the VAT part. And then we're paying 5-figure VAT bills. And every time you pay it over, you think, oh, that just hurts.
Yeah.
That
Turnover
hurts.
taxes are the worst type of taxes.
Because if you get taxed on your profit, at least you've made the profit.
Yeah.
And the argument is VAT, well, it's not your money. You're just adding it on top. But if you're selling to the end consumer, which is a lot of the time, you're not selling to a business who can reclaim it.
They would have paid the amount. Do you know what I mean? Like they just see it as the amount. They don't see it as plus VAT.
Exactly.
So
and if you add VAT on that again, then you're not selling because you're not competitive.
Yeah, my friend had this argument. So he's an electrician, right? And he can't go round Margaret's house. He's got a broken radiator in February. So yeah, Margaret, it's 500 quid plus the VAT. She ain't going to be able to claim back the VAT.
No.
She's retired.
They don't even know what it is. They just want to pay as little as possible. And that's why it comes down to businesses that accept only cash. Because in their eyes, if it's off the books and much cheaper, they're still keeping more of it. Yeah, it's illegal, but it's part of human nature. Like people will bend the rules or break the rules wherever they can.
Definitely. John, how can people find you on social media?
So on social media, my name's King Nobez, King_Nobez, and the accountancy firm is Noble One Accountants. If you Google that, everything will come up.
Lovely. Great. Well, thank
Love
you
that.
so much for coming on.
Thank
you for having me.
Thank you very much.